This is Chanel Bunger with the Becker Private Equity and Business Podcast, and today I'm excited to speak with Rick Kes of RSM, who joins us weekly to share an update on economic trends he's keeping an eye on. Rick, thank you as always for joining me. Why don't you take it away and tell us about some of the things that you're seeing out there?
Yeah, well, thanks for having me. Yeah, as many of the regular listeners may know, RSM is a leading professional services firm in the middle market. The middle market's pretty widely defined, by many folks, but what we'd probably consider somewhere between about $100 million in revenue, maybe a little higher, to a couple $1 billion in revenue. And generally speaking, we estimate that represents about 40% of the GDP of the United States. So a really big chunk of the U.S. economy is represented in the middle market. Maybe disproportionately, private equity market is probably a little higher in terms of percentage, just because private equity groups tend to invest in companies that fall into the middle market pretty frequently, because they're not early stage companies. They've been able to establish themselves, from a revenue perspective, but yet they're not multi national hundreds of billions of dollars of revenue companies either. So our client mix tends to have a lot of private equity flavor to it, both intentionally and sometimes maybe unintentionally. But we do focus a lot of our efforts around what private equity firms are doing in terms of their investments and where they're planning to go and what they plan to do. I think in 2023, we saw a lot of focus on making things better versus making acquisitions or making things bigger. So we saw a lot of focus around optimizing processes, figuring out which processes should be utilizing third-party resources versus being done internally, things of that nature. A lot of focus around automation, and then a lot of buzz and focus around things like generative AI and technologies of that nature. I think there's some optimism in 24 within the RSM related to what interest rates may do. So we're spending a lot of time trying to figure out what our position is or what our thoughts are or what we can share with our clients around the interest rate environment. I think the latest economic advice that our folks would have internally is, we anticipate rate reductions in 2024. To what degree is yet unknown. I don't think we're anticipating substantial rate cuts, but nonetheless, rates likely will start to go down, probably sometime in the middle of 2024. So, May, June, July, something of that nature. So that will obviously help, investments, private equity groups think about what investments that they're interested in, make some of the acquisitions that maybe they were waiting on the sidelines for, things of that nature. We obviously always watch jobs as well. Jobs reports always tell us something. And I think so far, the jobs reports have given us indication that, the economic tightening is from an interest rate increasing perspective, really hasn't, had a massive impact on the number of jobs being added at each month, which is a really good sign that the economy is really strong. It can withstand interest rate increases and withstand interest rates being at a relatively high level, but yet still add jobs. Those are good signs for the economy. So we're still pretty bullish on 2024. Hopeful that with some rate reductions, we might see some deal flow volume increase, which will obviously be good for private equity. And the last thing that we always watch, kind of taking interest rates, jobs, and then inflation data. And inflation, I think we kind of get a mixed bag of reports. Some reports would indicate good news, some would report maybe not so great news, or mediocre news. So I think the ultimate takeaway is, that inflation has curtailed to a point where, it isn't, the 8, 9, 10% increases in CPI like we saw last year. And we're seeing some slowing of the inflation. So that's also positive information related to the overall economy and the perspective that our economists have related to their 2024 outlook. So again, I think at the end of the day, the interest rate environment will kind of rule the roost and take kind of what happens there and really drive what happens from a private equity response perspective. But like I said, I think we'll anticipate seeing reductions in 2024, probably in the middle of 24, and we would anticipate private equity responding with making some acquisitions that they had been waiting to make previous to now. So I think that's really what we've been watching, what we're focused on, and what we're excited about.
Perfect. Well, Rick, thank you as always for sharing these important trends with us and for joining me today on the Becker Private Equity and Business Podcast. It's always a pleasure.
Likewise, thank you.